All right, what's up, party people? Rocco's got a little handkerchief on today. New QQQ all-time highs. It just swallowed. All right, so let's another low volume day today. I hate comparing it always to the same thing, but this is typically a Thanksgiving Friday half session type numbers. Final number on SPY shares, we put in 34 million. The 20-day average is 55 million. So, slightly more than half of what we've been doing in the past month. And if you look at the year-to-date SPY moving average, it's far volume average, it's far higher. So definitely quiet days, but never short a dull market. SPY closed down 30 bips. Let's share our screen and see what actually happened today. What moved markets, albeit not a ton on a quiet day. Let's look-see. All right, so right here, I have solar, big runner today, big runner. We'll look at the charts. I haven't looked at that one in a while. And nat gas leap, while copper and gold miners fall. QQQ, tech ETF, XLK, and India trade to new all-time highs on this below average volume. So we'll take a look. We'll see how your portfolio was affected. The big move today on the upside, there was not a ton. It was the solar Invesco ETF up 9%. That's with Tesla down. And we got to look at what exactly pulled that. I'm not actually sure what constituent raised this, but let me just see. Yep, First Solar was up 18%. I'm guessing on earnings or something like that. Or Jinko Solar up 17%, or DQ. One of these guys had earnings and moved the entire marketplace. And that gas up 5.5%. And on the downside, things that have been the hottest area, copper miners down hard today, 6.5%. So significant give back. I think we were talking about this in the video the other day, saying this has to go down closer to 10%. Well, you got 2/3 of the way there after this session. Gold miners down 4%. The energy ETF as a whole down 2%. That is off the back of oil being down 1.7%. And gold took it also pretty aggressively, down 1.8%. And home builders down 2 1/3%. So let's take a look at some charts, and we'll see if any of these are setting up for nice setups right now. So here's SPY trading 530. Things look great with SPY. I'm just seeing another garden variety type pullback that you should probably get down to about the 520 mark. Market looks very strong here. Doesn't look like you're gonna get an entry under 495. For a long while, in my opinion. I just don't think it's in the cards. Those are the February highs and our April lows. That looks like strong support levels, and you still have a rising 200-day moving average. Things get really ugly. You got support down there at 473, but I don't think that will be visited. All right, let's go to TAN. So we're looking at what moved up big today. This one, due to a couple constituents moving big. This is a failing story. This looks bad. Look at that. Amazing. This is why I love technical analysis. This is obviously a basket of many firms inside. This got all the way to its rising, to its falling 200-day moving average, and that's where it closed. So a lot of things have been broadening out. It would be interesting if this is a story that also does that. China reminded me of this kind of a chart, and then it broke above, started closing here for about 3 or 4 or 5 days, and then it held something. Let me see the last time this really plunged under 50 RSI. It's really been doing a lot of good work this month of May, since May 2nd. An important breakout here above 46, but we'll see if it holds. This could get back. I don't like the setup here. This looks like, to me, it has a mean reversion date and time set up with around $39-40 or so. So it would be quite a depreciation from here, especially if the market gives back a garden variety, 2% correction. So don't love that, but it was one of the very few spaces that were up today. Nat gas, this little engine that could. This is the best trade in the market right now over the past week. It's up 16.5% over the past week. It's funny. It's almost so similar to TAN. Looking at that overhead resistance, it did it there too with massive momentum. January 12th. This looks like what it's trying to do here. Also overbought, working off and oversold. Very similar environment we had from December going into early Jan. Then it did such a piece of crap they had to split it on January 24th. This could have a little bit more to go if it wants to test that way of gravity, moving towards 2170, which is another $1.15. That's another 5.5% or so. But in terms of, I'm a big mean reversion person. This looks like it should head back to 70, which would be quite a plunge from here. We'll especially see how the commodities are going. Sometimes people fall in love with this. Sometimes they fall out of love. Speaking of falling out, so the copper miners fell down hard today, 6 2/3%. Let's see, because this one was his nosebleed levels. Now it fell down to its 21 exponential moving average, where you see this bunching here. By no means a bad entry level here. I think this needs more of a time correction, in my opinion, than just price. So this is a great level if you're looking to put it in a position if you don't have any. I'd rather give it another week or two, see what happens. I don't think it's going to far below, but you do have a chance of this going to 45. But right here, if you don't have a position, it did a lot of work for you in 2 days, from going to 53, plunging to 48. So that's 10% that we were talking about before that you were expecting to get. We called for it, and here it is. Gold miners fell out hard today as well, down 4%. Chart is going to look similar due to, obviously, the allocation of the miners. Yep, pretty close. This one's a little bit stronger. Didn't quite fall to 21-day exponential moving average, but highs were put in 2 days ago. Worked off that overbought. Still holding a 50 RSI. Same thing. I would rather have this see a little bit of a time correction and see if it can hold around this 35 level. But these things were getting sold off today. Next one, XLE down hard. Let's see if this one's set up much better. XLE down 1.8% today. Yep, this one looks a little bit more ready, a little bit more ripe. If you get this around 91, give it maybe another week or so, a week or two. But this is basing much more. This didn't have its 52-week highs 2 days ago, like we saw on those charts of GDX and COPX. This had its high on April 12th, way up here. So we've been basing since there to there. Oh, you're just looking at my face the whole time. I didn't share the screen. Thanks for the comment, Nolan. Thank you very much. Boopity bop. My bad. I've been pulling up the charts here. All right, so there's XLA. Yeah, so it's been basing, and feel free to put comments on anything you see here. If you disagree, you agree. Chart looks like crap. Yeah, just a nice basing here, going back all the way to St. Patty's Day. So 2 months of basing here. This one looks like it has a tough road. I don't think it's going to go through the moon. You want to be where the commodities love is, and this looks like it's getting a little bit tired, maybe not tired, but I don't know if it's ready for investment right here, right now. GLD came down hard today, down to 1.8%. So similar percentage move for the XLA. Yep, same thing. Would rather see this did put in its high 2 days ago from its 2-week highs, all-time highs. I would rather have this see a little bit of a time duration. Just let it come down for breath. Those runners' ribs are popping. Let's see what it can do this mile. Nice 200-day rising moving average here. Definitely nice momentum with this one. I want to see ideally if it can hold, around that 215, 217 level over the next 1 to 2 weeks. If you don't have a position, I'd get involved. And home builders, they have come down hard on the home builders in the past. Today down 2%, but we'll see. It's been all week. This looks like it's getting a little more ready for buying. Its high was back here in the month of March 28th, rising 200-day, still holding a 50 RSI. Got a little bit scary here during the middle to end of April. If it can tag and hold around this 106 level for another week or so, right around 106, 105, where it is here, I think you could have a buying opportunity to a 110 target. I like that. It is not a favorite area of the market, though, this week, as you can see, from 110 to 104. So they've hammered it. All right, so those were the down moves today. Top 5 gainers of the past 5 days. No repeating charts. The best gainer in the market was Nat Gas over the past 5 days, averaging 16.5% or about 3% per day. So extraordinary. TAN, the second best long in the market. Who knew? Most of that because of today and that First Solar and Enphase and all those earnings moves. They're off-cycle reporters, especially I think a couple out of Asia with like DQ. So that is the second best trade in the market. And then Bitcoin, of course, Ethereum had a lot of tailwinds with that ETF news potential. But Bitcoin, the third best long in the market, up about 1% per day or 6% over the past week. Let's take a look at the chart and see how it's setting up. I would just put up Bitso. They're all obviously very correlated. All of them are up 6% in the past 5 days. The momentum is definitely with it. Its high was way back here in mid-March, March 13th, the rising 200 day. This is having a lower channel. You see lower highs each time. Doesn't look wonderful, to be honest. I think in terms of Bitso, I think it's going to tag right around that 26.5 level right around here, which would be around a 10% reduction in Bitcoin. So we'll see. I don't love the setup here. If anything, it looks like it's going to base right around here. But Ethereum is having crazy things work with it, which would bring up the crypto complex. We'll see. Silver, the fourth best long in the market. This one has lost a little bit of momentum, but it's still strong. A big day today to the downside, down 3.6. Let's see this, since I didn't pull up this chart earlier. Yeah, definitely want to see a time correction with this one. I think maybe you could get a chance of this going all the way down to 24 would be aggressive. That would be an amazing entry, but maybe closer to 26. So needs a little bit of time. This is a fast mover, down 3.6% today alone. And uranium, the fifth biggest loser in the past week. Uranium down a hearty 3% today. Its high was just 2 days ago, so playing in the sandbox of those commodities. This one, a more steady riser here. As you can tell, it's kind of had we've first touched a lot of these levels in September that we were going through in April. So an interesting cycle for uranium, but overall a nice story. Something I'd want to be long. Would want to give this about a week or two, see where it subsides. You get an entry around 30 half, right around here. That would be, yep, right around those May, this month lows. It would be a good level, I think. All right. Those were the top 5 gainers of the past 5 days, not top 5 losers. We talked about the home builders being down hard today. The ITB is the best short of the past week. Who knew? A lot of it was because of today's down 2.7 move, but this is actually down 6.5% over the past week. So a lot of it is, acknowledging rates, if we don't get those cuts this year, etc. But the home builders, they have been slamming this thing. Its high was March 28th. Let's see. I like this space. It is going through a bit of a tough period. I don't love some of these internals. Look like they can go lower here, but I don't think the bottom's going to fall out. Similar, I don't just the vibes of what I'm getting from the internals of the market. Looks like we're a little overextended. You may want to at least get a breath, see where it is. It's not, the space isn't going anywhere. See where this is in not a full 2 weeks, maybe less, maybe middle of next week, right after Memorial Day. If this thing's holding, 102, and you see that these held, I think you can get 113 on the way. All righty. XHB, already talked about that. The home builders is the second worst area in the market, so they're hammering a little bit more of the home construction. The XRT retail is the third worst space. I've been suffering a little bit with this one. Abercrombie and Fitch is my holding in the retail, but it's up more than a double, so I can't be too mad at it. But this is an ugly chart for retail. Started here on the 14th with those ugly numbers, and it's just been going down ever since. But voila, here we are at the 21 exponential moving average. And so also wanted to comment that the volume's getting less and less also in the market as a whole, but there's also, that tells me there's less selling pressure and these bars are getting smaller. So it could be right for a turnaround. I think it bases right around here around the 73 level, so it potentially gives it a little bit lower. But then I think the story is overall still positive. And then only one more, South Korea. They are hammering it. It was down hard. Just 0.5% today, but it's down 3.5% over the past week. So that's quite a fall. It was, getting a little bit rich here. Overall, this one doesn't do a whole lot. I'd like to interact a little bit more with the name, but overall, in terms of everything that's going on, there's just better areas for your money, I would say. But a no touch for me here. And then the fifth biggest loser of the market, CopX, down 3%. So best 3 absolute trades of the week: long nat gas, long solar, and short home construction. So if you were in those, congratulations. All right. We will see you either tomorrow or Friday. Peace.